Hello, I'm Leanne Spar. In this section, we will discuss fire insurance. The specific objectives we will cover are: we will define the terms policy, face value, and premium. We will find the annual premium for fire insurance. We will use the coinsurance formula, and we will understand multiple carrier insurance. Now let's look at an exercise in which we find the annual premium for fire insurance. We're going to find the annual premium for this building, whose territory rating is 2, the building classification is B, the building value is $272,500, and the contents value is $111,500. We're going to find the premium for the policy, a policy being a contract between the insured and the insurance company. The face value is the dollar value of the insurance coverage on the building itself, and the premium is the annual charge for the policy. In order to find the annual premium for this building, we're going to have to consult the table. This table gives us replacement costs in hundreds for buildings whose building classification is A, B, and C, and whose territorial rating is 1, 2, 3, 4, or 5. And we have building and contents replacement cost in hundreds. So the premium for the building will be $272,500 per 100 multiplied times the factor from the table, which is 0.45, territory 2, classification B. The premium for the building is $1,226.25. The premium for the contents is $111,500 per 100 multiplied times the factor from the table, territory 2, classification B. That factor is 0.55. So we have $613.25. So our total annual premium will be the sum, which is $1,839.50. Now let's look at an exercise in which we use a coinsurance formula. Indonesian Wonder Gift Shop has a replacement cost of $395,000. The shop is insured for $280,000. Fire loss is $22,500. Let's use the coinsurance formula to find the amount of the loss paid by the insurance company and by the insured. We're going to assume 80% coinsurance, so the amount the insurance company will pay is the amount of the loss times the amount of the policy divided by 80% of the replacement cost. So the amount that the insurance company will pay will be $22,500 multiplied times the amount of the policy, which is $280,000, divided by 80% of the replacement cost, which is $395,000. This value is $19,936.71. So in the event of this fire, the insurance company will pay $19,936.71. The amount paid by the insured will be the $22,500 of the loss, subtract the amount paid by the insurance company, $19,936.71, which will be $2,563.29. Of course, this should be paid by the insured, and so the gift shop will pay $2,563.29 in this fire loss. Now let's take a look at multiple carrier insurance. There was an insurance loss of $360,000. Two insurance companies covered this loss. With Company A, the coverage amount was $1,200,000, and with Company B, the coverage amount was $800,000. The coinsurance requirement has been met, so we want to find the amount paid by each company in this loss. First, let's find the total face value of the two policies. $1,200,000 plus $800,000 is $2 million. So the amount paid by Company A is going to be the loss, $360,000, times $1,200,000 coverage out of the $2 million. And this value is $216,000. The amount paid by Company B is going to be the loss, $360,000 times $800,000 out of the $2 million, which gives us amount paid of $144,000. So the insurance loss was covered by the two companies. Company A paid $216,000. Company B paid $144,000. Fire insurance is very important to businesses in order to prevent extreme losses in the case of fire. Now it's time for you to calculate some premiums and some coverages and some face values using the exercises in this chapter.